It doesn't take much. We're a tweet away or an announcement away from a lot of volatility up or down, and that's just normal. Will continue to be normal for this asset class for the next couple of years.
Break the cycle of exploitation, break down the barriers to truth, break into the next generation of privacy, break free. Free to scroll without being monetized, free from censorship, freedom without fear. We deserve more when it comes to privacy. Experience the next generation of blockchain that is private and inclusive by design. Break free with Midnight. Visit midnight.network/break-free. Built for speed, scale, and simplicity, Bridge helps businesses send, store, accept, and launch stablecoins instantly. Serve global customers without navigating the complexities of setting up crypto rails. It's how companies like X, Shopify, and AirTM unlock new markets, reduce FX costs, and move money at internet speed. Looking for a faster, cheaper way to move money worldwide? Owlting, now listed on the NASDAQ under the ticker symbol OWLS, is building the rails for stablecoin payments. Convert fiat to stablecoins and send money as easily as a text message. Learn more at owlting.com. Hey everyone, you're watching Markets Outlook. I'm Jensen, Sanasie, here with my co-host Andy Baehr, and our guest today is Inversion CEO and founder Santiago Roel Santos. Hey Santiago.
Jen, Andy, great to be here. Thank you.
Great to have you here. We start the show out quite broad. I like to ask everyone this question. We're sitting here at the end of the week. Talk to us about what you've been watching lately.
Obviously, the Fed rate cut is important. Bitcoin and the rest of the technology sector took a hit. And it's just a healthy reminder that as much as we see institutional excitement and hype and ETF inflows, this industry continues to be a very volatile asset class, and it's a levered NASDAQ play. So we should never lose sight of that.
Speaking of the Fed, Jerome Powell warned markets this week that another rate cut isn't guaranteed by the end of the year. A lot of investors and traders watch this show. What should they be looking out for when it comes to rate cuts in the Fed in the United States?
Well, I'm not a trader, but I think, as I said, it's a very volatile asset class. So I'm looking at earnings for the technology sector, probably more important. Jensen, Huang is equally as important as Jerome Powell here. And so I think a lot of people are reading into the language around maybe not as much as rate cuts. It's not a done deal. And so I think people just react to that. The reality is markets have rallied a lot this year. It's been a very strong year and a strong set of years. So any small deviation of that is going to have volatility in the markets. And people should just be prepared for that.
A lot of the rate cut conversations feel a little more politicized and integrated into things like tariffs. And we've certainly had news come out at weird times through unusual or unconventional methods, like the October 10th late Friday afternoon thing. So how do you think about that affecting sentiment and general risk appetite when things are more political and maybe less predictable?
We're a tweet away from Bitcoin and alts dumping 10-15% or more. I think traders in crypto have realized that the market structure is not as strong as perhaps you would have thought. And you saw that definitely a couple of Fridays ago. And from that standpoint, I think the market was too confident there looking at ETF inflows. I mean, we just had a record ETF inflow, early in October. You have all the DATs and MicroStrategies that, bode really well. And there's really positive announcements for the industry, institutional adoption, but it's still a very volatile, nascent asset class without as much liquidity. So because you don't have as much liquidity, it doesn't take much. We're a tweet away or an announcement away from a lot of volatility up or down. And that's just normal. Will continue to be normal for this asset class for the next couple of years.
You said we're a tweet away from the market dumping. I'm assuming you mean a tweet or a Truth Social post.
Not a tweet from me. That I've not been able to have that kind of
a Truth Social post, maybe from the president. Is that what you're implying?
Absolutely.
I think, the mood, and I think we had the same president and we had the same Fed chair, let's say in late July, early August. The mood was so, I think, regulatory bullish, Genius Act, things like that, but also just kind of education bullish. The narratives around payments and the focus on things like tokenization helped prompt, I think, a longer term investment thesis for a broader set of investors around the digital asset class. And when you think about your business, a lot of M&A was underway already, and M&A discussions that have even become public since then were clearly in the works. So how do you link the immediate market sentiment to the enthusiasm for longer term deal making or longer term valuation of things? In other words, Is the market's noise important to keep those conversations alive, or can people really, maintain a longer term horizon perspective?
We're not going to go back to a state of the world where crypto is no longer viable for businesses. Wall Street can now make money off of this industry. BlackRock's launching the ETF told you everything, right? You had Vanguard and JP Morgan that were resisting getting involved in the space. That changed a couple of weeks ago. I started my career at JP Morgan. Jamie Dimon now, clients of JP Morgan can now have access and buy crypto directly through JP Morgan. We're not going to go back to a state of the world where that's no longer the case. So how does that bode well for our business? Well, look, we are here because we believe this technology can be implemented for most businesses in the same way that the internet and software transformed every business. It's a 20, 30-year deployment cycle. A lot of the M&A activity you've seen this year, BVNK potentially being acquired by Coinbase, Securitized and Cantor going public, MasterCard potentially buying Zero Hash, obviously Stripe acquiring Bridge and Privy, and Robinhood acquiring Bitstamp. It's mostly, the M&A activity has been mostly centered around financial institutions scrambling to have a strategy on payments or stablecoins. What the market doesn't fully appreciate is the entire opportunity to bring stablecoins into traditional businesses, because every business receives payments. That's the opportunity that we see at Inversion, which is let's go buy deeply unsexy traditional businesses with challenged business profiles. They're not growing as much. Those businesses can be vastly more efficient with this technology. No one's done it yet. And the problem we have as an industry is it's not relatable, right? You go and walk around New York, you even go talk to regulators, and they'll say, okay, look, stablecoins are nice, but how is this actually impacting the end consumer? We don't have a good answer for that yet, Andy. We will if we do this right at Inversion.
At this very stage, and of course, one couldn't ask you to be held to this, do you see kind of convergence in layer one blockchain supportive stablecoins and convergence in stablecoins themselves as being the end state, or is it more of a proliferation of blockchains and a proliferation of stablecoins that are more specialized? Probably either will be abstracted away from many people's experience ultimately, but it seems to be the race that everybody is most broadly focused on right now.
You're right. Everyone wants to have a stablecoin, and some companies like Stripe want to have their own blockchain. I think we'll continue to see more experiments. It's something that continues to come up every cycle. How I envision the end state of this technology, as you said, the infrastructure will be invisible. The end customer will not care, can't pronounce Solana or Ethereum today, won't care where the transaction gets settled. They won't even care if it's USDC or USDT. They think in practical terms of, am I holding $1 in my bank account and can I earn interest on that? We at Inversion are very focused on delivering extreme value to the end user with this technology and really breaking away from this obsession in crypto from an academic hobbyist standpoint of leading with infrastructure. The reality is, Andy and Jen, when you board an airplane, do you really care if it's a Boeing aircraft or an Airbus aircraft? Maybe you care if it's not a 777 MAX, but other than that, you just care to go from point A to point B. And so this industry is really good from a financialization, stable coins, like the rest of the world wants to have dollars in their bank account. And so I think that's where the crypto industry has been faulty in the go-to-market and being practical in how to deploy this technology.
This episode is sponsored by Bridge, a Stripe company. Just as the internet made information global, stablecoins are making money global, and Bridge is the infrastructure powering that shift. Built Built for speed, scale, and simplicity, Bridge helps businesses send, store, accept, and launch stablecoins instantly, serve global customers without navigating the complexities of setting up crypto rails. It's how companies like X, Shopify, and AirTM unlock new markets, reduce FX costs, and move money at internet speed. Explore the future of global financial infrastructure at bridge.xyz. Looking for a faster, cheaper way to move money worldwide? Owlting, now listed on the NASDAQ under the ticker symbol OWLS, is building the rails for stablecoin payments. With OwlPay, you can seamlessly convert fiat currency to stablecoins, send money as easily as a text message, and on or off ramp globally. Learn more about Owlting at owlting.com.
We've learned a lot about behavior, right? And I guess some of the early stablecoin experiments, but also trading experiments and things like tokenizing equities are trying to attract the attention of this global trading population, which loves perps and loves trading everything, and operates in the, let's say, in the meme coin space on pure behavioral and expectation of flows kind of mentality. I feel like we're learning a lot about what delights people. And maybe the future you're envisioning is one where a lot of that's abstracted away and people just enjoy better convenience. But what kind of things have you seen? Maybe it's a bit of a curveball question that kind of aims itself at that delight that we've seen in the exuberance of people who just love moving towards global trading markets.
People like to bet. People like to go to Las Vegas. But we only have 40 million active users in crypto today. The market size is limited. It's big, but we're a $4 trillion industry and we have 40 million active users. ChatGPT is worth $1 trillion if it goes public, and it has 800 million users. So certainly people love financialization. People love betting on stuff, and markets are markets. The question is a 50 times perpetual product the best thing that we can do with this technology? And the answer is most definitely not. And if it is, we're not worth $3.4 trillion. And so we have to really take, and this is where we come at it from Inversion, which is let's go and acquire real businesses, utilize this technology to make it invisible, deliver a better service for the end user. If we do this well, our users will never know that they're interacting with this infrastructure, but they'll feel the impact. And I think that's the end state of the technology. And I think it's only a casino right now, but we've battle tested the technology with this financialized use case. And I think now it's time to wake up as an industry and utilize it in more value enhancing ways than just betting 24/7, 365.
Interesting take. I guess maybe a follow-up is that a certain amount of that market structure needs to remain in place so that the blockchains on which you want to build some of these things maintain enough decentralization and basically public access from a valuation point of view, security, consensus, things like that. Like, in other words, you need the Bitcoin blockchain. You may end up needing the Ethereum blockchain, and you may end up needing the Solana blockchain and maybe a couple of others. And people need to like those assets and trade them and participate in consensus, or else you kind of lose, you lose one or two legs of the stool. So in a way, do you feel as if that market structure has to remain supported, or can the technology find a just as resilient way to maintain itself if the casino starts to lose users?
I think it's very complementary. What you'd want to see over time is that the fees that are generated in these systems like Ethereum, Solana, the Inversion chain, are not 100% tied to one type of use case, which is perps and gambling on chain. You would want to see diversification away from that concentration, more into payments for businesses, transfers of value amongst businesses on the stablecoin side. That alone can be a massive category, right? It could be trillions and trillions of dollars, eclipsing what the Visa network processes, right? So I see a world where the fees that are generated in these systems come from recurring, non-speculative use cases. We need to get that right, because if in 5 years' time, we're still deriving 100% of the fees from very speculative, reflexive crypto assets, then this industry is not relatable. Right? And so if you go talk to a regulator, they're going to ask you one question, which is, tell me why this technology is useful. And you'll try to intellectualize it with what you just said of decentralization and security. And they'll say, yeah, but when you're a casino, people lose money on it time and time again. And so we need to really break away from that. And as an industry, I think we're in a very different regulatory environment today than we were last November. I think we're going to have a really hard time if in 5 years' time we don't onboard more users, we don't branch away from pure speculative activities, because at that point, I think most of these networks are not worth what they're worth. Ethereum should not be worth 500 billion. Solana, Ripple, if you don't show meaningful traction beyond that narrow use case, I think it's going to be very hard for the market to justify evaluations.
Can you tell us a little bit more about your acquisition strategy? What kinds of traditional firms are you out there looking to acquire?
We have certain sector theses. We look at businesses that have a lot of distribution and a good relationship with the end user. Core utility services like telecom are very interesting to us because it allows us to take that business that is deeply underutilized in many places. Like there's no reason why a telco can't be a bank with a digital wallet with stablecoins, because you live with a customer 24/7. The way we see the world is which businesses can we acquire at a really interesting price to layer on this type of technology and offer that end user base a very meaningful differentiated service that is a bank account essentially. And we can do that now at a fraction of the cost with stablecoins, with decentralized finance applications. A lot of the projects that I've been investing in, right? And that's really the opportunity that we see. There's a ton of businesses, like stablecoins alone will transform consumer behavior. Programmable money, the idea of earning in dollars, receiving dollars, earning yield for a vast majority of the population, where we're looking at businesses in Latin America and Asia, those are the markets where we see immense demand for stablecoins, for financial services that haven't existed before, right? So it's a massive opportunity. And you can acquire businesses at really interesting multiples.
So it really is about acquiring the businesses to acquire the users and introduce them to a better way than they had previously. We do got to let you go, but I want to kind of bring us back full circle. We started the interview off talking about the current state of the markets and how fragile they are right now. I have two questions for you as we wrap this up. Is there almost a before and after of October 10th? Was there a sense of false security in the markets before? Where do we sit today? And my final question for you is, where are we heading towards the end of the year? What's your prediction?
I think traders and investors appreciated this industry is still very volatile. No matter that you have continued ETF flows, it's still fragile as an industry. We're still relatively young. Liquidity can really dry up very quickly. So people are skittish. They're a bit scarred from that, which is a good thing. Remain very bullish. Into next year, you have a lot of the M&A activity, a lot of the ETF inflows. Reality is big allocators don't make investment decisions like crypto Twitter on the day-to-day. They're going into year end, they're going into committee and saying, gosh, we should really have exposure to this. We're seeing a lot of our competitors buy companies to get exposure to this asset class. A lot of people still, again, don't know how to pronounce Solana or Ethereum. They're getting off of zero. I see continued interest there, and that's going to persist into next year. And so, again, we're in a secular trend. Over the next 20 years, everyone's going to use this technology. How we get there is going to be ups and downs, right? But the trend line is very, very strong and upright. I would say the key inflection point was not so much 2 Fridays or 3 Fridays ago. It was last November when we had a total 180 in the regulatory environment, and people should not forget that. That is a huge, huge catalyst for the continued rise of this industry.
Santiago, thanks so much for being on the show. Thank you for joining Andy and I. It was a pleasure.
Thank you, Jen, Andy. Thanks for having me on.